In 1985, the median American home cost 3.5 times the median annual household income. That was the rule of thumb, the benchmark. The assumption that an ordinary person working an ordinary job could save for a few years, put together a down payment, and own where they lived. That rule no longer applies. As of 2025, the median American home costs 5 times the median annual household income. Nationally, a household must earn approximately $106,731 annually to afford a median-priced home at current mortgage rates. The U.S. median household income is $83,730. The gap between what a home costs and what the median household earns has never been wider in the modern data record. And in the 10 cities on this list, that gap is not a gap. It is a wall. We are counting down the 10 American cities where the math between what a home costs and what people earn has become so extreme that homeownership is no longer a financial goal for most residents. It is a mathematical impossibility. Every number on this list comes from the National Association of Realtors, the Harvard Joint Center for Housing Studies, HSH Associates, Redfin, Zillow, and verified local housing data. Nothing here is an estimate. Everything here is documented. Subscribe now because number 1 on this list requires a household income of nearly $500,000 to afford its median-priced home. That number belongs on this list. Let's count it down. Number 10. Miami. Growth boom. Affordability crisis. Miami gained more than 100,000 residents between 2020 and 2024. Every one of those arrivals put upward pressure on a housing market that was already stretched. The result? Home prices in Miami rose approximately 40% since 2020, according to Redfin data. The median home price now stands at approximately $510,000. To afford that home without being cost-burdened, spending no more than 30% of income on housing, a household needs to earn approximately $126,000 a year, according to Redfin and census estimates. The median household income in Miami is $59,390. The gap between what a home costs here and what the median household earns is approximately $67,000 a year. That gap is not a number. It is the distance between the city Miami is marketed as and the city most people in Miami actually live in. According to the Portland Housing Bureau's approach of analyzing who can actually purchase a home, the only household profile able to purchase a home in any Miami district is a dual-income couple. A single earner at the median income is not buying in Miami, not at any mortgage rate that has existed in the last decade. Miami is extraordinary. The homeownership math says it is for someone else. Living in Miami is like being invited to the housewarming party and discovering the house is not for you. Number 9. Portland. From affordable to out of reach, Portland spent years being described as Seattle's more affordable neighbor. The city without the tech sector price premium. The place where a creative professional could still afford to buy a modest house and stay. That description expired. The median home sale price in Portland is approximately $510,000 to $529,000, according to Redfin and SoFi 2025 data. The median household income is $88,792. To afford a home at the Portland median without being cost-burdened requires a household income of approximately $161,624, according to Zillow's analysis, 83% more than the typical Portland household actually earns. The Portland Housing Bureau's 2024 State of Housing Report delivered a finding that says everything about the current state of the market. The only household profile able to afford to purchase a home in any Portland district is a couple with family, a dual-income household. Not the average Portlander. Not the individual professional who moved there because it used to be possible. A dual-income household. That is the minimum to enter. Portland has also lost population in recent years, with thousands of residents leaving for the Vancouver, Washington side of the metro. The city is more affordable to leave than it is to own. Living in Portland is like renting a city that was once advertised as buyable and discovering that the price changed while the advertising did not. Number 8. Denver. The market that moved too fast. Denver was the city people moved to when they could not afford the coasts. No ocean, no California state income tax. A sensible, accessible housing market where a household earning a reasonable income could still buy a home and call it an investment rather than a debt sentence. The median home price in Denver stood at $550,000 in late 2024. The income needed to afford that home, assuming a 20% down payment and a 30-year mortgage at current rates, is approximately $150,000 to $160,000, according to HSH Associates and Visual Capitalist data. Colorado's median household income is approximately $89,000. The gap between what a home costs and what the typical Colorado household earns is measured in an entirely different salary range. Only 23% of California households can qualify for a mid-tier home in 2025, according to the California LAO office. Colorado tells a similar story. Denver home prices rose by more than 40% between 2019 and 2024. Household income over the same period rose by a fraction of that. The Harvard Joint Center for Housing Studies put the national home price to income ratio at 5-to-1 in 2024. Denver runs well above that. Living in Denver is like arriving at the party an hour after the affordable housing market left. The party is still going. The prices now reflect the people who got there first. Number 7. Seattle. High salaries, higher housing costs. Seattle's technology sector produced some of the highest median salaries of any metro in the country. Amazon, Microsoft, and a growing artificial intelligence corridor have made the Seattle metro one of the most economically productive regions in the United States. They also made the housing market. The median home price in the Seattle metro exceeds $800,000. The income needed to afford that home at current mortgage rates is approximately $155,000 to $165,000 annually, according to HSH Associates Q4 2025 data. The average tech salary in Seattle is approximately $150,000 a year. The average non-tech salary in Seattle is considerably less. The Seattle Metro has a 25% increase in home prices since 2022, according to available data. The people who work at Amazon and Microsoft can, with effort, afford to buy in Seattle. The teachers who educate their children cannot. The nurses who staff the hospitals cannot. The transit operators cannot. The tech economy solved the employment problem for a specific segment of the population and created the housing problem for everyone else. These two things happened at the same time, in the same city, and one gets substantially more press coverage than the other. Living in Seattle is like being in a city that solved the income problem for 20% of the people who live there and used that solution as evidence that the city is doing well. Subscribe now. We are halfway through. The 5 cities ahead are where the math between what it costs to buy a home and what people actually earn has gone from strained to structural. In the cities ahead, $500,000 in income does not guarantee homeownership. Number 1 requires approaching $500,000 just to afford the median. Subscribe and keep watching. Number 6, Boston. Prices rising faster than incomes. In the fourth quarter of 2019, a household earning $101,895 a year could afford a median-priced home in the Boston metro. In the fourth quarter of 2025, that same purchase requires an income of $190,858. That is the data from HSH Associates. An increase of $89,000 in required income. In 6 years, the median single-family home in Greater Boston is $950,000. A household needs approximately $162,000 annually just to qualify for the mortgage. Not to live comfortably, not to save anything, not to cover property taxes, maintenance, and the insurance that has been rising as fast as the home prices themselves. Just to qualify. Massachusetts home prices have risen 73% in real dollar terms since the year 2000. Inflation-adjusted median household income over the same period grew 4%, 73 versus 4. That is not a market correction waiting to happen. That is a multi-decade structural divergence between what homes cost and what people earn that shows no sign of reversing. Boston is also the market where a new one-bedroom apartment requires an income of approximately $163,000 just to cover development costs, according to Massachusetts Housing Partnership analysis, which means What gets built is not for the median household. It never is. Living in Boston is like watching the entrance requirement for the exam double every few years, while the tutoring for the exam stays exactly the same price. Number 5. New York City. The widening ownership gap. In New York City, a household needs to earn $200,280 annually to afford a median-priced home at current mortgage rates, according to HSH Associates Q4 2025 data. That is virtually double the income required before the pandemic. The pre-pandemic figure was approximately $100,000. It has now doubled. The median household income in New York City is approximately $75,000. The gap between what a home requires and what the median household earns is $125,000 a year. The median age of a home buyer in the United States has climbed to 59. The share of first-time buyers nationally has fallen by roughly 50% since 2007. Both of those trends are more pronounced in New York City than anywhere outside of the California metros. New York City's homeownership rate sits at approximately 48% below the national average in a city that has been continuously occupied for 4 centuries. The people who own in New York largely bought before the current market conditions, inherited property, or earn incomes that place them well above the median. The people who arrived in the last decade are renting. Not because they prefer to rent, because the math does not clear the bar for ownership. Living in New York is like competing for a seat at a table that keeps getting pushed further from where you are standing. The table exists. It is just not for you. Number 4. San Diego. When housing eats your income. In the 5 California metros, with the most extreme homeownership ratios, buyers earning the local median income must spend at least 67% of their salary on housing to afford a median-priced home, according to a Redfin analysis published by CNBC in February 2025. San Diego is among the 5. The share of median income required to buy a median-priced home in San Diego is 77.6%. 77.6%. The standard is 30%. The San Diego number is 2.5 times the standard. The income required to buy at current rates in San Diego is approximately $235,343, according to HSH Associates Q4 2025 data. The median household income in San Diego is approximately $85,000. The gap is $150,000 a year. The median home price in San Diego exceeds $800,000. San Diego is not San Francisco. It is not the epicenter of a technology revolution. It has a military base, a university system, biotech, and a tourism industry. None of those industries are paying their median workers $235,000 a year. California statewide, only 23% of households can qualify for a mid-tier home mortgage in 2025, down from 35% in 2019. San Diego's number is worse than the state average. Living in San Diego is like being told the affordable California option and discovering that affordable was defined by people who already owned. Number 3. Los Angeles. The down payment. Impossible. Zillow published a study in 2024 that calculated the down payment a median income household in each of the 50 largest housing markets would need in order to afford the monthly mortgage payments on a typical home. For Los Angeles, that figure was 81.1%, 81%, not the traditional 20%, not the flexible 10% available to some first-time buyers. 81%. The median price of a typical home in Los Angeles is approximately $962,000. An 81% down payment on that home is approximately $780,000. A median income household in Los Angeles, setting aside 10% of their income every single month into an account earning 4% annual return, would take more than 36 years to accumulate that down payment. The home price to income ratio in Los Angeles is 12.5, 2.5 times the national median of 4.7, according to a 2024 analysis of Zillow Home Values. The income needed to purchase a median-priced home at current rates is approximately $224,190, according to HSH Associates Q4 2025. The median household income in Los Angeles is approximately $76,000. Only 13% of households in the Los Angeles metro area earned enough to qualify for a mortgage on a median-priced home in the second quarter of 2024, according to the California Association of Realtors Housing Affordability Index. 13% and 87% of Los Angeles households cannot buy the median home in their own city. Living in Los Angeles is like spending your whole career in a building you helped construct and never being handed a key. Number 2. San Francisco. Even high earners struggle. In San Francisco, the mortgage payment to income ratio, the percentage of a typical household's gross income that goes to servicing a median-priced home, stands at 67% according to Redfin's 2025 analysis. The national benchmark for affordability is 30%. San Francisco is at 67%. The income required to buy a median-priced home in San Francisco, which stands at approximately $1.2 million, is $321,463 annually, according to HSH Associates Q4 2025 data. Monthly mortgage costs on that purchase exceed $7,500. The homeownership rate in San Francisco is approximately 37.6%, among the lowest of any major American city, and sustained at that level not because San Franciscans prefer renting, but because the alternative requires a six-figure income on top of a six-figure down payment. San Francisco's high-income tech workforce has helped keep the market propped up. The median income in San Francisco is approximately $112,000, higher than any other major American city. It is also a city where that median income is still $189,000 short of what a home purchase requires. Even San Francisco's high earners are not buying easily. The people who are buying are in the top 10% of even that high income distribution. The California LAO office reports that for mid-tier homes, only 23% of California households qualify for a mortgage in 2025. In San Francisco proper, that figure is substantially lower. Living in San Francisco is like earning more than almost anyone else in the country and still looking at a price tag that requires you to earn twice as much. Number 1. San Jose, America's most unaffordable housing market. San Jose requires a household income of $458,504 annually to afford its median-priced home without being cost-burdened. That is the figure from HSH Associates Q4 2025 analysis. It assumes a 20% down payment and a 30-year fixed rate mortgage at current rates. It assumes the household spends no more than 30% of gross income on housing, $458,504. The median single-family home in the San Jose metro costs more than $1.9 million, according to the Harvard Joint Center for Housing Studies 2024 report. The Redfin median home sale price for the San Jose metro stood at $1,514,289 in 2025, with the income needed to afford a typical home in that area at $408,557. However large the precise figure, one thing is not contested. No other major American city requires anything close to the income San Jose demands of its buyers. The tech sector makes this possible for some. Google, Apple, Cisco, Meta. The engineers and executives who earn $300,000, $400,000, $500,000 a year. For them, the San Jose housing market is expensive but navigable. For the nurse, for the teacher, for the city planner, for the firefighter, for the administrative assistant at the tech company who earns $60,000 a year. The math does not exist. Not without an inheritance. Not without equity from a prior sale. Not without the kind of family wealth that the first generation of a family in America almost never has. The median age of a home buyer in America is 59. In San Jose, that number exists because the market has selected for age, wealth accumulation, and prior ownership over every other factor. Youth and income alone are not sufficient. San Jose is the global capital of technological innovation. It produces more patent applications per resident than almost any city on Earth. It is also a city where the median-priced home costs 19 times the national median household income, where the income required to buy is nearly 5.5 times the national median household income, where the people who build the wealth of the technology sector cannot afford to own a share of the city that wealth created. Not a complaint, a measurement. And this particular measurement has no peer anywhere in the United States. Living in San Jose is like working at the mint and not being allowed to keep any of the currency. The pattern across these 10 cities is the same pattern that has been building in the American housing market for 4 decades and that accelerated dramatically during and after the pandemic. Home prices rose 48% nationally between 2019 and 2024. Median household income rose 22% over the same period. The gap between those two numbers, 26 percentage points, is the engine that produced this list. The median age of the American homebuyer is now 59. The share of first-time buyers has fallen by nearly half since 2007. In nearly half of all metro areas, buyers must earn more than $100,000 to afford a median-priced home. Homeownership has not disappeared, but it has been redistributed. It has moved from something available to most working people towards something available primarily to people who already own something. The equity required to buy in the cities on this list can only be accumulated by people who already have equity. Everyone else is renting, not by preference, by the math. Subscribe and check out the rest of the series, the counties, the states, and the cities where the numbers say things the marketing has been slow to acknowledge. Thanks for watching.